In the last video, we have seen how over the last few days, the price of Bitcoin has increased day by day, and it was approaching this important weekly resistance around 12K. And at that point, at least some resistance was to be expected. And since the price rose so much and so fast, day after day, I opened a bunch of shorts starting from 12.2K all the way down to 11K, which was also another important support, as we can see from this green box. So I actually closed all these shorts around 11.3K, and we can see that now the price is actually lateralizing in this very tight range between 11.3 and 11.5K. So it was a good idea to close the shorts. And now I am actually looking at this longing opportunity entering around the 10.8K, because 10.8K has worked many times as a resistance and support in the past weeks. We can see here how the price has bounced several times, not far from there, and that also here we have this area where the price has jumped several times. So we are trying to enter here, and we are gonna try to take profit around the current level, which is actually becoming a support. So if eventually the price goes down and reach our entry point, that will be our next support. And we are going to basically trade between this range, the two supports, 10.8K and 11.3, 11.5K. Our stop will be around 10.5K. I believe that in general, $100 or $200, so for example, 10.6K would be enough. But just to have some extra insurance against top hands, we're going to put it a bit lower. About that, you can see here that even though I closed all my short layered positions, so every position was small chunks and they were of equal size. So I closed all of them around the current price, 11.3K, and yes, the price went a bit down towards 11K. But the key to observe here is that this is actually a stop hunt. I will show you why. If we go on a much lower time frame, we can see how there is a very big spike here, almost until 11K, and this was in a very short period of time. So basically what the whales or smart money have done, most likely, they have pushed the price down in a way that people who actually longed and put a stop below this range, basically they got stopped out, and in some cases also potentially liquidated, because not everyone is actually using stops. They just leave the position open in high leverage, and if the market doesn't go their way, they just get liquidated, paying also the penalty from the exchange for having kept the position open, but losing too much margin value. So we are going to try to avoid being hunt if we open a long around 10.8K. And I will update you how this is going to go. We then have another interesting opportunity on Ethereum. In this case, I will be opening a trade on Binance, unleveraged. What we can see here is that since the beginning of August, well, actually also before, it's a very long-term trend line. You can see that for Ethereum, the bear market bottomed around $80. So actually before Bitcoin, which bottomed in April, 4 months before, a month later than Ethereum. And we can see this trend line on Ethereum, which goes up, up, and up. The price never goes below it. And this condition keeps holding true. So on top of that, we can observe that on the marked indicator, whenever the two moving averages head across, the price would rise. So it happened here. We had a very nice rise. it happened here again, this part. And also here, after a big drop, it started rising again. Now it is in range, but still above the trend line. And I am hoping, based on this path which has repeated over time, that we're going to see the same thing again. So now we are on this fundamental horizontal support around $210. The price is a bit lateralizing there, and I'm ready to enter a position around $210. We are gonna set a stop below the trend line. I like to use a bit of a large stop because basically here we have another support around 195, but to prevent some spikes, we want to make sure and maybe put the stop around 190, 185. This reduces a bit the risk-reward ratio, but at the same time gives some room to breathe in case the price is highly volatile. So we are going to put a stop there, and then the take profits, we try to identify them by using Fibonacci levels. So we look for confluences between the levels and the price supports and resistances, so the key levels. In this case, you can see a very nice key level matching. So this resistance that is matching with the level 0.5 of Fibonacci. And we could see the same for 0.618 and also 0.786. The way we draw Fibonacci is from the swing high till the swing low. So here we have the low, right? And here we have the high. So we'll see how it goes, and I will keep you up to date on how this trade went. One last interesting opportunity I'm going to take for today is on ALGO, which, by the way, is going to the project is called Algorand, and it's been announced to be listed on Coinbase. In the past, listing on Coinbase had quite a significant positive impact on price, so the price would shoot up and then retrace, of course, because the idea is by the rumors sell the news. But even if so, we are going to make profit. So in this case, we are going to wait for an entry at this level where the volume profile is more important. So basically there's been more volume around this support, which makes it a key level in price. And that's a good entry point. So we can see it's basically a pivot. The price used it as both a resistance here, for example, and then as a support here, and then as support again here. So that's an interesting point to entry. In terms of stop, we could set it just below, but since there is another support, which is also quite significant, not in terms of volume, as we can see, but at least in terms of the fact that the price bounced several times there. So we want to take into account that the price could actually go further down, and we put the stop a bit below the second support as a safeguard for our trade. In terms of take profits, we are gonna look again at the key price action levels and Fibonacci. In this case, we can see how if, for example, we enter at 620 Satoshi, 625, 630 approximately, and you can also enter layered if you want to capture the average of the price. So, for example, 600, 33% of your position, 625, 33%, and so on. And then, in terms of take profits level, it seems potentially interesting to use the 0.618 at 700 Satoshi, which is where the price is now, and it's encountering a support, which is likely to turn into a resistance in the moment we try to touch it from below. So could see like this movement and then back, and then potentially higher again. And then after that, we can take further profit at around 850 or maybe a bit below, because the spikes sometimes can tell a bit of a false story. The spike can happen just because there is FOMO, but the candle actually didn't close there. It is very important to actually look at the closing of the candles, because that's what most professional traders do at the end, also with algorithms. And since we are actually talking about a bias, what happens is that if everyone looks at the chart, know there are some statistical rules and so on, then we just follow them. And it's better to be with the crowd, or at least with a smart crowd, than trying to make guesses. After all, technical analysis is the only way we have to make decisions in an unbiased way. We can take into account different technicals, different fundamentals. We can look at the volume. And the tools that have worked for decades, they don't give any guarantee that it's actually going to work out, but at the same time, they give a good chance, statistically speaking. So I will keep you updated on this trade as well. And thank you so much for watching. I hope this was helpful. And please subscribe.